presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the July 15th terrific Tuesday edition of the Trader's Edge. The opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magical and magnificent Monday. Let's make sure we do all that we can do to have a terrific Tuesday, and welcome to all our new listeners out there. If you're new to TFNN, welcome to the Hotel California. You know, once you check in, you cannot check out, and we love being here with you. You know, it's so cool that I get to do each day, each morning, I get to share 2 hours with you doing the thing that one of the things that I'm most passionate about. I mean, I love taking a look at the markets, where they're going, utilizing the tools, you know, the A to B equals CD tool, Fibonacci expansions and retracements, take a look at swing points, being able to teach. You know, each of us are really, I like to do it through story. So each of the openings for my segments, you know, they're all about story. They're all about something that can inspire us because, you know, if you want to inspire someone, you've got to be inspired yourself out there. If you want to touch someone, you've got to be touched. And, you know, there's nothing like the Rocky story. Many of us, perhaps all of us, have a Rocky moment, you know, where we had hit rock bottom and we're able to overcome that. And you've got to be able to do that in trading and investing. There's no question you've got to be able to do that in trading and investing. I like to do it through story. You know, one of my favorite stories is a story about Roger Bannister. Maybe some of you know this story. I've told it before here at TFNN. Figure that for thousands of years, I told this story to my kids over the weekend again. You know, I like to be able to have a metaphor, be able to allow folks to be able to draw a conclusion. And when you take a look at the story of Roger Bannister, here's the deal. For thousands of years, people tried to break the 4-minute mile. Thousands of years. They tried everything. And then on one day, Roger Bannister, he decided the day that he actually broke the 4-minute mile, and he did it in 3 minutes, 59 seconds, and you know how many ever other ticks that might have been added there. The day that he actually won the race, the one that he broke the 4-minute mile out there, he had considered not running because of the wind conditions out there. But he had run this race many times in his head. And folks, the day that he broke it, here's the deal. Here's what's so amazing. This is why visualization is so important. He wins the race. He breaks the 4-minute mile out there. And did you realize how long did it take before the next person stepped up? How long before the next person stepped up and broke the 4-minute mile? Do you realize his record only lasted for 46 days? And then within that first year, I think it was about 17. Since then, there's been thousands of people who have been able to break the 4-minute mile. So for thousands of years, people couldn't get it done. Yet as soon as they saw that it could be done, as soon as they saw that one could break the 4-minute mile, then people believed out there. Well, look, when it comes to your trading and investing, if anything that we go over here at TFNN for our 9 hours of live programming seems difficult, seems like you just can't get it, hang in there. Have a Roger Bannister moment, because you too will show you how it's done out here. You know, if you listen on the radio or your mobile device at TFNN.mobi, we appreciate that very much. Remember, you can always catch the live stream by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones. Click on that. The show will stream live, and you'll be able to take a look at our charts. And of course, you can do that through the eSignal 12 application out there, because TigerTV is included with inside the application. Let's get our day kicked off. This is Terrific Tuesday. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up 28 points. They're trading out at 17,006. S&P futures up about nearly 2 points, trade at 1972.50. NASDAQ futures up 8 points, trading at 39.27. Russell 2000 up 90 cents right now, trading at 11.62.50. King dollar up a penny. Not a ton of, well, I'll take that back. There is a bunch of movement inside the British pound, Great British pound. We'll go take a look at that currency pair. It actually did something very unusual at 4:31 a.m. this morning. If you were up, you know what I'm talking about. It gapped up. There's a fairly decent gap inside of the Great British pound, so we'll go take a look at that currency pair. Gold is up $2. It's been trading as high as $13.14. Right now it's trading out at $13.08. Silver's up 8 pennies. She's trading out at $21 even. Steven, you've got light sweet crude back $1. It's trading out at 99.80. How about that? If we take a quick peek across the globe out here, we're going to see that the DAX in Germany, the FTSE in London is basically flat. Over in the UK last night, we had and I do mean flat, the FTSE's up 50 cents and the DAX is up $1. Over in Asia last night, the Nikkei finished up 98 points. That was up 0.6%. Still didn't break out of that little consolidation range that we looked at yesterday. Yesterday was all about consolidation patterns in the market that we viewed here on Tiger TV. The Hang Seng up 113 points, also about 0.5%. And the Shanghai up 0.2%, up 4. So where do we begin our day out here? What do we want to go ahead and take a look at? Let's start off by taking a look at let's go take a look at the Great British Pound. Let's do that. Let's go over to the currency pair. To do the currency pairs, I'm going to use my Ensign Windows software application fed by eSignal out here. And we're going to go take a look at the Great British Pound. Now, what I'm going to actually first switch over to, as soon as I can find it here, is the intraday chart. And very unusual. Let me put here's the Great British, here's the 30-minute chart for the Great British Pound. And notice the gap out here. The gap meaning going from at 4:30, in fact, let me just put this on a 1-minute chart out here. Then you'll actually truly see the gap out here. And I didn't get a chance to investigate it. I don't know what took place. And it's unusual. You know, one of the cool things about being able to trade currency pairs, if you're a person that says, hey, I don't mind having my money exposed to the market, but I'm going to go ahead and take Stevie's advice. I'm going to make sure that I've got a bracketed order on anything that I trade. That means I've got an exit strategy, both if the trade goes against me as well as if the trade goes with me. And inside currencies, you know, because you typically don't have gaps, other than over a weekend out here, your stops will typically get hit. They'll get filled out there. But boy, the actual close at 4:30 a.m., that was at 1.7079. And then where did it open? On that very next session at 4:32, open at 1.7133. Now, what does that gap inside this currency pair mean? Well, what it means to me, you talk about a wide-ranging bar, because that is in essence what it is. Oftentimes, because we're so visual, you know, people needed to see Roger Bannister break the 4-minute mile out there. Once they saw him do it, they knew that they too could do it. They knew they had it within inside themselves out here. Oftentimes when you have gaps out here, gaps in the life, gaps on a stock chart, you really, because we're all visual, you need to go ahead and fill those in. If I were to fill this gap in here, you know, it has a different meaning. You'll just see, even I believe, look, it does for me, and I know how to fill them in just with my mind. I know how to paint those pictures because of the importance of gaps. And then when people use the terminology, gaps get filled, all they're really saying out here, and this is where gaps are your friend, is that price is just going to travel back to a place where it broke out. Or if something is gapping down, price is going to travel back to an area where price had where it had broken down from. And that's what you want to learn. You want to be able to learn to buy breakouts. We're going to go take a look at gold and silver because they had broken out topside. Of course, they gave us big reversal signals here yesterday. But take a look at, you know, if that were the bar, take a look at that bar on a 1-minute chart, no less, compared to any other bar that we might be able to try to find inside of the Great British Pound. You won't find it. There's no wide. I mean, that is a wide-ranging bar, most certainly. So what does that mean for us? Well, let's go take a look at a daily chart. Let's take a look at a weekly chart here for the currency pair. And you see, when we take a look at technical analysis, somebody might say, hey, I don't even understand these currency pairs. You know, when you've got the Great British Pound versus U.S. dollar, which way does it work? How you do in the conversion out there? Look, let's not make it complicated. Let's just start with a stock chart out here. And let's not worry about what the actual upper left-hand side of my chart says out here with regard to what it is that we're looking at. You see, because when it comes to technical analysis, trading patterns, A to B equals CD patterns, rising price channels, whatever it is, the Chapman wave, Gartley butterfly and cell patterns out there, it all works the same. You see, the chart patterns, they don't really care what it is that you're trading out here. Now, if we take a look at a daily chart, actually what I'm going to do is I'm going to go over to the weekly chart. I'm going to look at a longer-term time frame first. That way it keeps things in proper perspective out here. And inside the Great British Pound, if you're watching us on Tiger TV, one of the things that you're going to see, first of all, you want to talk about great butterfly and Gartley patterns out here. Well, this chart's got it. Because if you come back, and we're going to take a tour back here. Let's do the tour. If you come back to the time frame of January 2009, And you start from the low out there, and that's the low that we're looking at is 1.3501 inside the Great British Pound. Made a beautiful 0.786 Gartley buy pattern. It did that back in May of 2010. Beautiful pattern out here. Made also another little Gartley sell pattern. This is back here on the trading session of May 4th, 2012. That pattern most certainly worked, and that pattern formed a little butterfly pattern with all kinds of expansions and contractions of swing points, and that was done back here in March of 2013. And during that time period, from the time period of July 2nd, 2010, through this wide-ranging bar on February 14th, to celebrate Valentine's Day in 2014, wide-ranging bar, what the Great British Pound was also doing was traveling inside a consolidation. Now, that consolidation pattern is what's referred to as a measured move, and that measured move says that the Great British Pound, on its weekly chart, wants to get to $1.80 or so out here. And it's up above resistance. It's up above the world so high. Well, that's where the Great British Pound wants to go. And that little gap up on the 1-minute chart was pretty darn powerful. 877-927-6648. This is Steve Rhodes, TFNN. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow futures up 26, S&P up 1.5. Moving in the pre-market out here, we've got Able Marble Corp. ALB is the ticker symbol out here. Out with numbers. Oh, wait a minute here. It looks like maybe a buyout. Yeah, that's a buyout. Rockwood Holdings and Able Marble Corp. Let's skip past that. Goldman Sachs then lead the charge dollar-wise, the upside in the pre-market as they closed out at 167, up a couple of bucks. Trade now right now at 169.85. Let me see here. Where's their revenue numbers? Revenue numbers including net interest income $9 billion versus 8.61. The price range of 169.80. Let's go take a look at that, and we'll go back to the Great British Pound here in a moment. 169.80 is where Goldman Sachs is trading into. Its swing point out here, most recent swing point high, is from June the 20th, and that high is 171.08. The low is 169.42. So Goldman Sachs is going to go ahead and attack that level in the marketplace. If it can close above that, take it out with volume. That'll be a large A to B equals CD to the upside out here. In fact, if we take a look at the conservative pattern out here, the conservative A to B, we'll go ahead and draw them both in here. So if we can take out that swing point, your A point that I'd use on the conservative one is the June 2nd low. The high would be, the B point would be the swing that it's going to deal with this morning, June 20th. We'll see if we can take that out. And the C point will be the retracement down on July 10th. The 1-to-1 A to B equals CD inside Goldman Sachs would say 174.70. The larger A to B equals CD pattern that this would could fulfill. Let's go take a look at that. We'd start all the way back here on April the 11th. We'd use the same B point, the same swing that's going to be attacked here this morning, as well as the same C point. That larger pattern would give you a price projection of about, that's going to give us a, I'm going to have to delete it. My apology, because even I can't follow it. I should have just colored it differently. There we go. So now let's take a look at the A to B equals CD, so I can give that to you here again. Again, the A point's going to be the low of April 4th. B point's going to be the June 20th high, and the C point's going to be the retracement down to July the July 10th. 1-to-1 A to B equals CD gives you 180. So I think it was around 174 to 180 would be the range if, in fact, Goldman Sachs is able to take out that June 20th high at 171.08 out there. So with Goldman Sachs being inside the Dow, certainly being a part of the XLF, that is an important stock to be watching during the day. Now I'm going to go back to the Great British Pound here just for a moment, especially for those of you that trade currency pairs out here. And then we're taking a look at a similar A to B equals CD pattern. Now, the A point on the daily chart takes us back to March 24, 2012. Your B point is up here at the high on May the 7th. It makes a retracement down into a low on May the 28th. 1-to-1 A to B equals CD says that inside of the Great British Pound, that would take it to about the 172.30 level. I could even make a case 173.75. And if we take a look at the market profile of the futures contract here, let's go do that. Just put this whole package together, and you'll see that it too has just a little bit of price that it needs to clear in order to break through its next form of resistance. And its resistance on the futures contract is 171.70. So close above that says that all things are go inside the Great British Pound for higher price out there. believe we also had J.P. Morgan out with earnings as well. Let's take a look at what it's doing in the pre-market, just to cover the financials. Closed at 56.29, trade now to 57.91 out there. So at 57.91, let's go see what it is tackling. It, too, has a swing point that it's going to try to move into. The low is 57.24. The high is 58.22. And that takes us back to June 23rd. Now, that swing has got 16 million shares out there. Yesterday, I pointed this out. This had gapped up with 14 million shares, so that was a nice move. We hadn't really seen any huge volume to the downside. We did see where J.P. Morgan had broken a market profile low, and he closed today above 57, well, I'm going to say 57.69. Let's just keep it really in the cards. Let's just deal with the swing point, June 23rd. Now, what's the A to B equals CD pattern inside of J.P. Morgan? If we can take out the swing with volume, well, your A point's going to be down at May 16th. That's going to be your A. Your B point's going to be the swing it's dealing with June 23rd. No guarantee it'll take it out just yet. We know it's going to trade into it. And the C point is going to be down here on the trading session of July 10th. 1-to-1, A to B equals CD. Takes you up into the $60.21 area. And let's see, what do we have back there? And here's where the metal meets the road out here. And that's on this trading session from April the 10th. That's where things really began to break down inside J.P. Morgan. That high out there is 59.39. Closing above that would be very, very bullish. 877-927-6648. Steve Rhodes, Tiger Financial News Network. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 43 points, straight out at 17,035. S&P at 1979. NASDAQ Composite up 6 points. That's trading out at 44.46. Russell 2000 up 47 pennies, trading out at 11.66. NDX 100 up 5. New York Stock Exchange up 2. Gold up $2 and change. You got silver up 9 pennies. Their call numbers 877-927-6648. Lead the charge the upside. Anadarko Petroleum, APC, is the ticker symbol, up a nice 3.5%, up $3.70 out here. GoPro, GPRO, up $3. That's up 8% this morning. Goldman Sachs up $2. La Jolla Pharmaceuticals, LJPC, up 22%, up $2.40. They must have cured something. Preclinical data, oral galactin-3 inhibitor, and non-alcoholic something or other. But let's go take a look at the stock chart. This thing is a nice little $2 stock, and it's on the move out here. Well, how about this? This thing had quite a sign of strength. So if you watch this on Tiger TV, we take a look at the stock chart. Here's wide price spread, accelerated volume. That's on the trading session here of March the 11th, 2014. This thing moves. The prior day, it had closed out at $9.76 out here. Did I say a $2 stock? I didn't mean a $2 stock. It closes out at $9.76. The very next day, it opens $18.60. That's quite a shebang out here. Now, that was a high volume high that's not been tested. LJPC, La Jolla Pharmaceuticals, is what we're taking a look at. High volume untested high says that price ought to be back there. Take a look at the pullback here. Here's what you like to see. It pulls back on light volume all the way to the breakout. It pulls back below the breakout, quite frankly. Pulls down to a low on the trading session here of May 23rd. Gets down to $6.17 out there. And today you're seeing another little sign of strength in it. Now 432,000 shares. That big sign of strength at 8 million shares, so not too shabby here today. Price inside this equity ought to go target that area, which is the low, 1725, to the high of 1950, and it is well on its way as we speak right now. That's ticker symbol LJPC, La Jolla Pharmaceuticals, to the upside. We've got Visa moving higher again this morning, and bringing along, joining the party here is MasterCard. So let's go take a look at MasterCard. Visa was up strong yesterday. We'll take a look at that equity, but let's see what MasterCard is doing as we speak this morning. MasterCard taking out a most recent swing point here from the trading session of, let's see, is it that high? May 27th, the high was 77.89. We had 77.88 on June 6th. So you can use either or, 3 million shares on the latter, and 5. Let's use 5 million shares, the actual May 27th high. So far today, MasterCard is up with 589,000 shares. If it gets above the price level here of 77.89 with more than 5 million shares, you got an A to B equals CD. Supply line here doesn't seem to be much of a problem. That's the trading session from March the 21st. 14 million shares to the downside out here. So if it can clear this, and you got MasterCard, which will want to go ahead and form an A to B equals C to. You say, where would price take us to inside of MasterCard? Well, the target you would look at would be right around the price level of 81.66. 81.66 to 84.17. I would say 84.17 takes you back into the January 2014 swing point. That's about $84.75 out there. So if MasterCard can get some volume, it wants to go revisit the highs out here. Certainly has changed its trend. MA is the ticker symbol there. I did mention Visa. Visa yesterday confirming an A to B equals CD to the upside out here. If we take a look at that pattern, the 1-to-1 is 224.70. I don't think that's where Visa wants to stop at all. Only made about slightly less than a 50% retracement. So it looks like Visa wants to go make a run for its swing point high. That'll take you back into the trading session of January 21st, 2014. 4 million shares out there, 4.9 million shares. That price level again, 230.82 all the way up to 235.50. Looks like that is where Visa is headed to. So let's go take a look at the financial sector. Let's go see what that is doing out here. So we've seen Citi, we've seen J.P. Morgan, we have seen Goldman Sachs out with the numbers. You've got the XLF. That is the financial sector inside the S&P 500. That is up about 0.75% here today. I believe I just lost it, 17 cents. So let's go take a look at what the XLF is doing out here. The XLF trading right now into its most recent swing point, but really the level that we need to pay attention to. Let's look at the XLF, June 9th. That high, $22.93, 32 million shares out there. When price got above that, so 22 million shares, that was on July 3rd. Now, July 3rd is a shortened trading day. We traded for, about 3 hours, 3.5 hours on that trading day. So, 22 million versus 32 million, do the math. It's probably pretty darn close. Very next day, 24 million shares. Look, here's the deal. Today, if it could do more than 32 million shares, then you've got a confirmed A to B equals CD up inside the XLF. It's neither overbought nor oversold, so there's no reason for it to not make that move out here. It looks like there's maybe an unfinished business, an A to B equals CD pattern. The March 21st high, let me see, that had 67 million shares. Did we ever get above that with volume? We did not, but nonetheless, it's up above that level. So let's just take a look at that lightning bolt pattern, see what its price projection is. That's really what we're using the lightning bolt pattern as, is a price projection tool and a method for buying and selling what I call the D point, the completion of the A to B equals CD pattern. So the larger pattern says the XLF would like to go tackle the $23.34 level. That's what the large one says. The small one out here, let's take a look at that. The small one takes us back to the lows here in May 15th. That low being the 21.56. For the B point, I'm going to use, because I need to use, because it's the right swing to use, June 9th. Pull it down to a little bit of retracement here on June 16th, and 1-to-1 there says the 23.81. So very likely the range here for the financial sector, if it continues to move higher, 23.34 to 23.92 out there. On the financial sector, one of the top three, I believe, one of the top three sectors within inside the S&P 500 out here. As far as what it is you're going to focus on today, as far as what the S&P futures have been struggling with here, we'll go take a look at it. Struggled with it yesterday, struggled with it this morning. They are trying to deal with it right now, and that's its market profile high. 1974 has been the number. Yesterday's high was 1974 even Steven. Right now you're trading 1975.25 inside the S&P futures. Closing above that would be bullish. Most certainly closing above the July 3rd high, 1978.25, would be even more bullish. So that's where the S&P, that's what you want to watch for inside the S&P futures. If I go take a look at the Russell 2000, it's been struggling out here. Russell 2000, however, today, if it can clear 1178.96, then it will be pulling up the rear. And if it pulls up the rear, the S&P gets above its market profile high. The NASDAQ and Dow are already above theirs. Then you're going to have some synergy in the market that suggests moves higher out here. So we'll see how the day plays out. I'm a little bit cautiously optimistic out here. The reason to be so cautious is really because of this completed pattern here. That's the QQQ. It's got a 1.618 butterfly sell pattern. The actual price projection on that would take it about 96.34. Yesterday's high, 96.06. The high so far today, 96.06 as well. Yesterday's volume, just not good. 19 million shares out there. And when I say not good, it's because the Qs make highs with light volume. So you got a completion of a larger pattern out here. If you can take that out, get some volume going, then I say, okay, it moves on to something else. We take a look at some other pattern inside of the Qs. But reason just to be cautiously optimistic. If we take a look at what's going on inside the VIX index here this morning, let's go switch over and see where that is. That had traded below the 50-day exponential moving average yesterday, although it was off of its session lows by the close. The key number to be watching today, $12.03. Right now it's trading at $11.49. That says bullish to sideways move inside of the markets. And that's just using that as a liquidity gauge. One of the best uses of the VIX index is to use it as a liquidity gauge. If I go check out the Euro Japanese yen, we looked at the Great British Pound U.S. dollar. Let's go take a look at the Euro Japanese yen. Let me take a look at an intraday chart. Here's the daily chart. And the daily chart here, nice little bullish reversal signal yesterday. Still wasn't enough. It needs to clear 138.37 to close above it. That's acting as a resistance level. I'm going to switch down, take a look at the 30-minute chart here for the Euro Japanese yen. This had formed a nice 0.618 Gartley sell pattern. Did it with a wide-ranging bar. Really suggests that it wanted to move to higher price, but it never really did. It worked off that extremely overbought condition by doing what? By moving sideways out here, and right now in a little bit of a trading range. If it cracks this level here, if you take a look at all Gartley sell patterns, they've got 5, or Gartley buy patterns, in this case here, Gartley sell. They've got 5 potential outcomes. The first outcome is making the 0.382 retracement, the dead cat bounce. Well, that's what it did here this morning at about the time frame of 5:30. Gets it down to the 1.382 retracement is 138.07. Gets down to a low here, and the low where it got down to happened to be the breakout session from yesterday at 3 o'clock in the morning, between 3 and 3:30. So price came back to the breakout. If that breakout fails, it says it was an exhaustion move. We take a look at a 30-minute chart out here. Right now we're just consolidating sideways. It's not really providing us with any type of information out here. But the level that we want to be watching, most certainly, I say let's make it a little bit easier. I'd say the level we really want to be watching is the candle session from 2:30 in the morning, right at about 137.85. A break below that, and you're going to have a liquidity gauge that's going to be saying not so fast out here. Of course, the second outcome of the Gartley pattern is not that much further down, about 1. In fact, it's really, that's where it is. That's the 0.618 area, 137.85. I should have seen that when I was looking at the chart. So 137.85, that's the number. It closed below that. That offers the third outcome, a 0.786 retracement, right around 137.69. So we'll take this one day at a time. Now, speaking of breakouts, breakdowns out here, let's go take a look at Goldilocks. Let's go see what it is doing right now. Oh, I'm like when I get an error message on my screen. That doesn't help me. But let's go take a look at it. We can overcome. I've got backups after backup here of charts that we can take a look at. Let's go take a look at Goldilocks. So we got gold right now trading out right around a 1309 level. It has on its intraday chart, let's go take a look at it. That was a 120-minute time frame. We focused on this last night. I'm grateful to have done Tom's show. And we're going to take a look at the 120-minute time frame and see what gold did. And I mentioned that when something gets into a overbought or oversold condition, in this case here, we're looking at a 120-minute time frame for gold, got into the extreme oversold condition. That was at about 10 o'clock yesterday morning, so right shortly after we came on the air out here. You can see how price formed these little spinning top-ish, doji-ish style candles here for the next several hours, next 6 hours. And really what gold did was it worked off that oversold condition by basically moving sideways to slightly higher. Now, what it ran into, what happened to be a new market profile that formed back here in the trading session of about 6 p.m. last night, so as I was going off the air. That market profile high, 1313.30. You can see how price has contained that. So what I would say here today, because the oversold condition has been worked off somewhat out here. The real level to watch inside of Goldilocks is 1313.30. Again, it's a 120-minute time frame chart. And 1305, a crack below 1305. Not just a crack, but a close below 1305. And the resumption of price to the downside very likely continues out here. If we take a look at the 240-minute chart, so let's just double our fun out here. Let's go to a 4-hour chart. It has a new market profile low that also formed last night. This one at about 8 p.m. And 1306.10 is the number there. So a close below 1306.10, and it starts to say that, okay, price would be moving to the downside. Now, you say, where would price move to? And I say that's an excellent question. And I would have to say, let's come back. Let's take a look at a daily chart. And the easiest thing for us to do is just take a look at market retracements. That's market retracements coming off of the low from June 3rd all the way up to the high that was put in out here. And this was on Thursday of, forgot to save that. Let's do that one more time. Let's come up here. Let's take that. There we go. Okay, and we take a look at, so now what gold has done, and if you're extremely bullish gold, I mean extremely bullish gold, what it has done, it's held the 0.382 retracement level. But I couldn't tell you, even if you're extremely bullish gold, to go ahead and take a stab at it here. Yesterday's move down was with accelerating volume. You got reversal patterns that are in place, price relative strength divergent patterns. They very often lead to a lower price. You make the 0.382 retracement in one session. That's not what something that is strong like bull likes to do out there. Now, it travels sideways here for the next several days, and it starts to get a little bit more bullish, much like we took a look at the Euro-Japanese yen as it was moving topside, and it couldn't really do it, just other than moving topside by just a small amount. Hey, inside of Goldilocks, let's open ourselves up to, if it can't do much more than just make it to the 0.382 retracement in the next couple of days, just move sideways, then you have a possibility. Maybe taking a look at the forward side. But otherwise, I would have to say 1280 is a much safer bet than 1263. That could be a beautiful thing. 877-927-6648. Steve Rhodes, TFNN. You ready?
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is always better when we're together. Thanks so much for joining us here, folks. Again, if you're new to TFNN, welcome to our hotel. 9 hours of live programming each and every day. I kick things off in the morning, get the first 2 hours covered. Following me, we've got our man Basil Chapman. On Tuesdays, we've got the full lineup after Basil. We do the options hour. We do that on Tuesday. That is a unique, very fabulous show, so stay tuned for that. We've got Daryl Martin. He teaches you how to use the Nadex platform, what I like to call the Ron Popeil pocket fisherman. Of course, it's not the pocket fisherman, but that's what I remember Ron Popeil best for. They set it and forget it. I guess that was the chicken rotisserie system that he also came out with and sold. Then after Daryl, we've got David White. He'll teach you about the Power Law Vector Indicator. That is a proprietary system that really helps you to measure the energy between swing points, and that will assist you in your trading for sure. It's a charting service that he's developed. It's available here at TFNN.com. After David, we've got our man Andy Hecht. He does technicals and fundamentals, and then after Daryl, after Andy, we've got Tom O'Brien from 4 to 6. So where we're at in the market here, the Dow's up 32, S&P's up 2, Nasdaq's up about a point. Russell 2000 is back a buck. We're seeing a little bit of the give back of the futures. Part of that, I'm watching the Euro-Japanese yen. It's moving just a tad lower. Hasn't broken through its a breakout area, but we'll see what happens at around the 137.85 type area. Had a request from one of our tigers in the Tigers Den to take a look at a equity, PDL Biopharma. PDLI is the ticker symbol. PDL Biopharma, they manage a portfolio of patents and royalty assets, so sounds like a little patent troll out there. Nothing that I'm real fond of. But let's go take a look at the equity out here, just because I have been involved with patent litigation at cost. Between the several companies that were involved, we spent pretty much about $4 million. Now, this was a small business. This was a business I owned. So, and of course, we ended up settling that hours before we were going to trial. I did come out victorious, but really in the end, I ended up being a loser with all that money that was spent defending. Now, I didn't spend $4 million. Our side of it was about $2 million out there. If we take a look at PDL, so I'm not real fan. It was a patent troll company, by the way. They never produced a darn thing. In any event, if we take a look at the daily chart here for PDLI, we can see that it's trading into a big downdraft session out here. That was from December the 3rd. This moved off of the highs with 7.3 million shares. The prior day made a high with 4.5 million shares. That is not what you like to see when something is at highs out here. Right now, that's where it's traveling into that range out here. Look, if it gets above 984, because if we take a look at this equity, it's got several different downdrafts out here. That's two specifically, two big downdrafts. That one we just looked at December the 3rd, and if you take a look at the February 5th area, that's another high volume low that has not been tested. So this equity at some point in time wants to go revisit $7.38. It's trading right now at around the 949-ish area. So, and if I take a look at a weekly chart on this equity, PDLI, and I'm not trying to look at it from a shaded standpoint of the mere fact that I don't like patent troll type companies out there. If we take a look at the weekly chart, do you want to talk about a bearish engulfing candle in 1 week? This took back. This is the week was ended, basically the week ended November 25th, 2013. How do you like to go away for Thanksgiving and then come back to where the following week it takes back and gets priced all the way back to the May of 2013 level? Folks, so thanks so much for joining us here at TFNN. Stay tuned. The Money Masters show is up next if you're off to start your day. Have a great Tuesday. Thanks for joining us. I look forward to seeing you soon. Take care.
Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.